Tomas Martinez here. We're in the TM3 studio. Super excited because I've got a buddy here, John Hudson, and he is going to be talking about what is going on in the market right now in terms of mortgages. But first, I want to thank our sponsors, Luxury Home Magazine and Spanish Grove Academy, the #1 Spanish pre-K in SA.
That's
and
awesome.
I'm excited,
Awesome.
John, you're here.
Yes.
You
this is my first
finally
time
made
here.
it to the studio.
We're at my office.
That is so true. That is so true. Well, listen, I'm pumped for today because we were talking on the phone this week.
Yep.
Obviously, the market is a little funky,
Crazy.
right? Yeah.
Crazy is a good word.
Crazy is a good word. Obviously, Corona has changed everything. But before we get into that, because we will, I want to know your San Antonio story. Like, take us back. Tell me about your San Antonio story, you know, how you came to live in this amazing city.
Oh, absolutely. Well, I was born at Santa Rosa. So there's my San Antonio start. Born and bred here. Grew up in San Antonio. Went to St. George for elementary. Went to TMI for high school. You know, it's actually kind of funny. I now live in the same neighborhood that I grew up in. And when I go running every morning, I run by my old house.
Oh, wow.
And it's great because I get filled with nostalgia of great memories every time I go by there. But no, I love the city. I mean, San Antonio, I mean, I tell everybody it's like that aren't from here. San Antonio is like a big high school. Yeah. In some form or fashion, you really know, you can feel everybody.
Yeah.
We are a great community here. And so, yeah, I'm proud to be a San Antonian. And hopefully, you know, soon our Spurs will be playing again, and
yes,
we could be cheering for them.
Yes, definitely miss that.
But no, my San Antonio story, dude. I grew up here, and you know, I'm honored and privileged to be able to raise a family here again. So, you know, met my wife in high school.
Okay.
So actually middle school, which is pretty cool.
Oh, snap. Okay.
Yes. So then we graduated, didn't see each other for 12 years, and then we came back together. Kind of funny how that works.
That's cool. So going back to high school, I want to go back to TMI days, right?
Yes.
So tell me, you know, what was that John Hudson like at that point, you know, high school, from an entrepreneurial standpoint, from a, you know, you're the VP at Mortgage Financial Services. And so what was going on kind of business wise, entrepreneurial wise back then?
You know, business wise, I mean, it's kind of funny because that kind of goes into, you know, my college story too. But, you know, from a business standpoint, I'd say leadership, you know, I mean, TMI is a fantastic school. I learned a lot there from an educational standpoint, but I had the honor to be the one of the team captains for our 3-time state champion soccer team.
Oh, okay.
But it was just kind of beginning to learn some of those leadership skills and managing a team and leading a team, leading other people. So that was definitely a pivotal moment in my career. And my mentor, Coach Mario Ravella, you know, I look up to that guy. Like he was like, I was a father figure because, you know, he kind of pushed me when I didn't want to be pushed, but definitely got me where I am now.
That's killer.
Yeah.
So best soccer story, go. Best soccer story, leadership, go.
Well, this is supposed to be kid friendly, right?
Yeah, kid friendly. That's right. Enzo's gonna listen to this.
Yes. No, you know, honestly, it was probably winning state my senior year, and it was that moment of a baton being passed to the underclassmen and realizing that, man, this awesome bubble is gone.
Yeah.
So it was very sad, but at the same time, it was exciting because it was that point that I realized that, okay, now we move on to the next chapter. Where do we go from here?
Yeah.
So winning state for that third and final time was honestly probably one of the best experiences that I've had because, man, I've got some great friends that are still out there.
What position did you play in soccer? By the way, I didn't know this.
Defense. You didn't know this?
No, I didn't know this.
No, defense.
Okay. So you were quick.
I was fast.
You're quick.
Used to be fast.
Well, no, you can still run pretty fast in running. I know. I've run with you before.
Yes, no, that's true.
Yeah. So defense. Okay, so now fast forward. Yes. You go to TCU. Yep, you're a Horn Frog. That's right. So you go to TCU. Now, were you studying finance? Was that going to be your path?
No, honestly, it's kind of funny. There was a period of time I wanted to be in human resources.
Oh,
I'm a people person. And then so I actually studied management and accounting.
Okay.
And I'm not an accountant.
Yeah.
I'm not an accountant, but
that's not your role.
But I wanted to challenge myself. And so all I did was successfully lower my GPA a little bit.
Yeah.
But so anyway, so management and accounting. And, again, from a leadership standpoint, things just happen. So probably one of my greatest learning experiences was I became president of my fraternity.
Oh, okay.
Yes. So
this could get interesting.
My entire junior year, I was managing, 100 college people.
Wow.
College students.
Budget too? Were you doing all the budget?
We had budget. We got in trouble. I mean,
oh my goodness.
And so, you're having management meetings with, school department heads on a fairly consistent basis. You're managing a small business.
Wow.
But, you begin to learn some of the crisis management stuff too, right? And that's, to a certain degree, you just kind of feel your way through it.
Yeah.
There's no guidebook for a lot of the things that we face. And so we just have to keep calm, keep cool heads, and navigate the waters.
Yeah.
And you go through that whole process of, did something happen to you or for you?
Yeah, that's good.
But no, so then it's funny. The summer after my junior year, I saw, still up there in Fort Worth, and I was like, okay, well, I need something to do for the summer, something that's going to pay me some money.
Yep.
And so I was looking on the little job board and saw this opening for an internship with a company called North American Mortgage Company.
Oh, okay.
Which I didn't know at the time. I barely knew there was a T in mortgage.
Yeah.
Except for the old Monopoly games, right?
That's good.
They don't really teach you mortgage in college.
No.
And so I went and applied and got the position.
Okay. Junior year,
TCU. Summertime.
Okay.
I'm now going in, I'm becoming an intern.
Okay.
Didn't have a clue what I was doing.
Yeah.
I was basically an assistant for somebody at the time. And, they kind of taught me, okay, well, this is what a credit report looks like. And there's this file cabinet over there. And I need you to go through all that entire file cabinet and call those people and see if their credit scores come up. Okay. I really didn't know.
Oh my God.
Really didn't even understand what the whole concept of borrowing $200,000 to buy a house. I mean,
so what year was this?
This was 1998.
98. Okay, got it.
1998.
So we graduated around the same time.
Yeah,
so 99, right?
Yeah, I graduated in 99.
Me too. Okay.
And so I kind of slowly got hooked in the business.
Okay.
I eventually learned what was happening.
Okay.
And I can't remember the lady's name, but I'll never forget her face. Yeah. I went to my first closing with the loan officer that I was working for.
Yeah.
And this lady was a nurse. She was in her scrubs. She started crying at closing. And, of course, I was like, why are you crying?
Yeah.
And she was like, I finally did it. Did what?
Yeah.
I have a place. I have a backyard for my kids. And this is a single mom and obviously working as a nurse. And to see that, how impactful that moment of joy was for this lady to just now become a homeowner, man, I was hooked.
You were hooked.
I immediately was like, man, that's the coolest thing that I've ever witnessed. And
you saw that while you were still in college?
Yes. While I was still in college.
Got it.
And so immediately it was like, we are not doing human resources.
Yeah. Time to switch.
We're going to figure out this mortgage thing.
Yeah.
And so I immediately kind of went and said, okay, I need to buy a book and it's how the bond market works. Because I had some accounting, I was doing some accounting work. And so I was like, okay, well, let's go figure out this bond market stuff.
Yeah.
And so slowly started to learn about mortgage rates and how they work and
what affects them, what doesn't.
Yes.
Which we'll get to.
Yes. Why do they move the way that they, the way that they do?
Right.
And so, graduated college and it was coming up to that point. And it was like, well, I really didn't have a job yet. And, the gentleman that hired me, Brad Sullivan, who I work for today, believe it or not.
You work for Brad.
I work for Brad. So, another great leader that's pushed me throughout my a lot of my lifetime here.
Yep.
And, he said, basically, you want to be a loan officer? Sure.
Yeah.
Let's go. As far as I knew, I had a job. So, all right. And then you get the senioritis for your last semester of college and go out and have fun. And then there was no real training now that you're a loan officer and you're on your own.
Yep.
And it was a little bit different back then. There was
sink or swim, right?
It was absolutely sink or swim. It was, okay, here's a rate sheet, go get loans.
Yeah.
Oh, how do I do that?
Right.
And so, I was running out there and talking to realtors and saying, hey, send me some business.
Yeah.
And, back then, there was no internet or email back then you had a pager and a roll of quarters in your truck. And you drive around. Oh, I got a beep. Pull over, use a payphone. And so does Enzo know what a payphone is?
I showed him it one time. Yeah, we did show him a payphone.
Okay, he's been to a museum. Yes. Okay. But yeah, back then you just, again, you felt your way through it.
Yep. You figured it out.
And trial by error. I had some great people that I worked with that taught me, again, how to structure loans. So I knew how mortgage rates work, but now there's this whole credit piece.
Yeah.
Now there's the collateral, the asset, the appraisal of that property, debt to income ratios, reading tax returns. So there's a whole gamut of what goes on for somebody that's buying a house. And what I will say, before, I know we're going to talk rates a little later, but in my 22 years of career, I'm yet to find two people out there or two families that have the exact same financial goals or plans or scenarios.
True. Yeah.
So me personally, I get kind of annoyed when people just say, well, what's your rate? Well, there's so many factors involved in that. So, don't get
caught up. Don't get caught up. Yeah. So I'm curious. So fast forwarding to where you're at now. You're at Mortgage Financial Service, Vice President. Okay. And okay, let's dive into this because I think the first big thing was, okay, the Fed rate went to zero. Right? Like, I literally was on Facebook around this time. It was Sunday. This happened on Sunday
6
night.
o'clock. Yeah.
Okay. So like literally like, it's like, brrr, like all of this, oh my gosh, this is what's going to, mortgage rates go to zero because of, and I had seen all of that. So when you found out, because now the one thing that you got to tell everybody is that you're on the backside of this, and from a government standpoint, talk to the side that you're on, not just from the consumer side, helping consumers, but you're also on the government side in terms of understanding what the government is doing and being a part of that. Talk a little bit about that.
Sure. So, well, before we get too far down that rabbit hole, so let me just back up a little bit. So in my experience, I really am kind of a mortgage geek.
Yeah.
I study it. I think I'm the only person in San Antonio that I could say has gotten to testify before Congress about mortgages.
There you go.
And interestingly enough, I was testifying about the impact of Dodd-Frank, which guess what, was passed after what? The last time we had a housing recession.
Yes.
So I really am kind of a geek again when it comes to this stuff. Yeah. So I know what the regulation is, and I know what the government is trying to do is to stimulate the market to make sure that people are calm and acting with level heads and trying to go about their daily business right now. So what the Fed did on Sunday, and yes, I mean you probably saw my post. I mean I had to put something on there because I was getting text, I was getting phone calls, even from borrowers.
Right.
Like they're not even my borrower; they're calling me.
Right.
And this is Sunday. Explaining to people that no, mortgage rates are not 0%.
Yeah.
And it's unfortunate because I think the media doesn't do a good job about explaining what drives mortgage rates. So you say rates are at 0%.
Yeah.
And so there's no sexy 30-second soundbite about mortgages.
Yeah.
Unfortunately there's not.
Right.
And so what happened with the Fed is banks lend money to each other. Mm-hmm. So if you're the Bank of Tomas and I'm the Bank of Hudson, well, I'm the Bank of Hudson and I need some cash to lend to other people, but I don't have a bunch of excess cash, so I'm going to borrow some money from the Bank of Tomas.
Mm-hmm. Okay.
So the Fed sets that rate, and that's probably the best way that I could explain that. So
for banks to borrow from other banks.
Right.
Got it.
And so I'm now borrowing that cash from you at 0%. And what does that do? It frees up other liquidity for me to, spend money and lend more
to
money
lend
out.
it back out at an interest rate.
Right.
Got it.
At a short-term interest rate, because that money is changing hands on a daily basis.
Right.
So short-term lending rates, you'll see them come down.
Okay.
Mortgage-backed securities are tied to 30-year mortgages, 15-year mortgage bonds. So people are expecting to get a return for their investment. So they actually move, two completely separate directions. Yeah. I hear a lot of people that will say, the media does this a lot too with the 10-year treasury yield. They say, 10-year treasury yield's down at all-time lows. Well, historically, the 10-year treasury and mortgage rates, they're not married, but they date.
Mm-hmm.
So they kind of have a similar type of movement with mortgage rates.
Right.
Obviously a little bit higher than the 10-year treasury. But what we saw in the last couple of weeks was the yield on the 10-year went down and the rates on the mortgages went up.
Oh, interesting.
So they actually diverted. So they're not dating anymore right now.
Yeah.
But eventually
we need them to come back together.
We need them to come back together. Yes. Because treasury yields are super low right now.
Yeah.
But again, I think it's super important to stress that, when people hear and see that, hey, mortgage rates are at 0% because the Fed just dropped rates. Yeah. I hate to be a bubble burster, but that doesn't impact you or your mortgage directly.
So how can we, I'm hoping this podcast will help, right? Like
yes.
get people.
I think it's good for people to be informed. There's a lot of bad information on the internets and social media. So
right.
Yeah,
you can't listen to everything that's on Facebook,
no.
Right? Well, with what's going down, obviously with COVID-19, right? And
yes.
So there is this sense of like, okay, how is this going to affect real estate, right?
Right.
So if we looked at the historical, I think you have a slide on historical chart of interest rates,
yes.
right?
Yes.
If we could pull that up, Gabe, because I think it's interesting for people to know, like, okay, is this a good time to buy, right?
Yes.
Based on interest rates where they're at. And Gabe's going to pull up, talk to this for a little bit.
Okay. So this is a great chart. And the reason why it's great, because I think, what do we lose sight of so often in our society? Perspective.
Yeah.
I mean, if the news cycle is 24 hours, but our attention span is 7 seconds.
Yeah.
So
which is scary
for lots of reasons. But this is really important, I think, for people to understand. So if you go there, if you look between 1971 and 1980, the average 30-year fixed mortgage was at 9.4%.
Yeah.
Between 1981 and 1990, the average 30-year fixed rate mortgage was 12.3%. With, look at that, peaking up there at around 18. Between 91 and 2000, the average 30-year fixed mortgage rate was 7.9%.
Mm-hmm.
Now, I could tell you that the very first loan that I originated as a rookie loan officer was a 5/1 adjustable arm, because you never forget your first loan.
Right.
It was 10% down, 5/1 adjustable arm.
5.1?
No.
Oh, 5 years.
5/1. Yeah. So,
Okay.
so it was fixed for 5 years.
Okay, fixed for 5 years. Got it.
The borrower paid 2 points, had a 740 FICO score, and got 8.5%.
Oh my God.
That was the first loan I originated. It was 1999.
But that was the market.
That was the market.
That was the market at the time.
That was a lower rate than what was on the the 30-year fixed at the time.
Right.
But so look what happens here. Between 2001 and 2010, the average 30-year fixed rate mortgage is 6%. And then 2011 to 2020, the average 30-year fixed is at 4%.
Yeah.
So, yes, when people are saying that rates are at historical all-time lows, they are.
Yeah.
I mean, they typically in a normalized market, they might move a hair up and down just a little bit every day. But again, you have this blip here the last time in 2012, which was coming out of the 2010 Dodd-Frank crisis.
Yes.
The government started buying mortgage-backed securities.
And had they not done that before?
They had not done that before.
Okay,
or
so
so little.
Yeah. Okay, so they did it a little bit, but they started doing it more in 12.
Massive amounts of mortgage-backed securities the government was buying, or the Federal Reserve was buying these mortgage-backed securities.
In 2012.
In 2012.
Okay.
So what did that do? It brought liquidity back to the marketplace. And it was part of a stimulus package. It was called quantitative easing. So now here we are. We're in QE1, QE2.
Yeah.
And that quantitative easing it calmed the markets. I mean, that's what it did, calm the markets. And so, but the bottom line is it was great for consumers. Now, mind you, in 2012, the economy was still coming out of the collapse. We were still, coming out of the throes of recession, so mortgage rates dipped there, and then look, they shoot up. They shot up to about 5% there in about 2013, 2014. Yeah. I mean, it was like, hey, you're not getting 8%.
Exactly. Or 18.
Or 18 for crying out loud. But then they came back down.
Yeah.
And then they shot up a little bit, and then they came back down. So this was in 2016.
Okay.
In 2016, rates got low again.
Yep.
And then what happened? They shot back up to, and then this was really 2018. You started to touch 5%.
Yeah.
Which is still, it's, again, historically low. It's cheap money.
Yeah.
And then what we had here in the tail end of 2019 and early part of 2020 was, the economy softening already, right? When we've been on this record tear.
Yeah.
For at least, throughout this last administration.
Yeah.
So the economy's doing great, but now we're starting to see slowdown.
Yeah.
So what's happened, people are checking their portfolios, and people are starting to move some money into some safe havens like mortgage-backed securities or bonds. Yeah. So rates are starting to come back down. But then it was like the perfect storm that's blown up all of a sudden.
And so, I mean, obviously, this is part of COVID-19, right? This is part of this coronavirus idea. But you're what I'm hearing, and maybe you can help me.
Yes.
But maybe there was already something stirring even prior to this.
Absolutely.
Okay, so talk to that.
It's at least, it's my opinion, and I should preface that I am not a financial advisor.
Yeah.
I just like to throw out my hot sports opinion,
right?
About what I see, what's going on.
22 years, you got a lot of experience.
I've seen this. We haven't seen this exact scenario, but we've seen stormy waters before.
Okay.
And so, I think, the market was already kind of fickle. I mean, the stock market, record highs. Well, eventually somebody's going to roll 7 on a craps table.
It's true. I've seen it happen on a cruise.
Right. Bitcoin.
That's right. Bitcoin.
So, eventually so there were already jitters in the marketplace.
Okay.
And then, and I know this sounds completely crazy, but you had this, all of a sudden, this mess between this little match going on between OPEC, between Russia and Saudi Arabia. Mm-hmm. They just glutted the market with oil. So what did we see? We saw prices of oil go from $60 a barrel to now it's trading around 20. Mm-hmm. So already, wow, okay, there's going to be an economic slowdown coming from this. Well, and then there's a few people with a cough in China that we're starting to hear some noise about. And now it's just kind of spread out and spread out and spread out and spread out. So where right now, honestly, what we saw at the beginning of March 2nd, that was the day that rates literally hit their all-time low.
Okay.
So 2.75. And now keep in mind, just the week before, rates are at 3.75. And I'm giving some ballpark numbers here, right? So let's say they went from 3.75 to 2.75 in a day.
In 1%. Had you ever seen that before?
Never.
Up or down? You've never seen it? Okay.
Not that fast. You see rates come out, but this was a one-day move. That's over the course of a year right there, that jump or those drops also.
Gotcha.
Not in a day.
Yeah.
And so
somebody that locked on the second got 2.7. Someone that locked on the third.
They better close.
Woo.
Yes.
Wow.
And so then, think about what that happened though. If you're an institutional investor, who buys 30-year mortgage-backed securities? Mm-hmm. Institutional investors, insurance funds, hedge funds, some cases government. Mm-hmm. But they're all expecting a return on that investment. Well, I just paid all this money for these loans, for this pool of loans, billions of dollars at 3.75, and now all these people are going to refinance, and now what I just paid out in premium for that bond is gone. Yeah. So now I'm going, I'm not buying anymore. And so then what we've seen, and since then, is extreme volatility in the market, in the mortgage-backed security trading market.
Got it.
Everyone talks about what's going on in the Dow. I don't even pay attention to the Dow.
Yeah.
You know, I'm not looking to retire or sell stocks in the next 2 weeks.
Right.
Not even worried about that.
Right.
I watch what's happening in the mortgage-backed security market because that's what drives interest rate movement.
Got it. Not the Fed rate.
Not the Fed rate.
Dude, just make sure we understand
at
that.
0%. You know, and so now, now what you have is everybody's panicking and going, oh, you know, my investment, I'm not going to buy any more mortgage-backed securities. Well, then shoot. Then guess what happens? How am I going to get you to buy some more mortgage-backed securities? Well, now the value of that bond just dropped, and I've got to raise the rate, your return on that investment. So now they went from 375 to 275 to 375, and this rapid jigsaw that's going back and forth is completely spooking the markets to where there's a lot of people that are saying, you know what, I'm out. This is crazy.
So does that mean part of this could be coming back to where the government starts buying back some of these, like what they did in 12, or they're already doing that?
The government announced that they're going to be purchasing.
Oh, they did?
Bonds again.
Okay.
But are they buying treasury bonds or are they buying mortgage-backed securities?
Okay.
I mean, they had announced they were going to be buying, they said they were going to be buying mortgage-backed securities, but there's been no details coming out of that just yet. So in my opinion, we'll see, in my little crystal ball here, we'll see the same activity again in 2012. The economy is not in the best of shapes right now. I mean, so many people are being impacted by the COVID-19. We haven't even seen the ramifications yet for the drop in oil prices. You know, the domino's been tipped. You know, my opinion, we will go into a recession again.
Yep.
I mean,
and I've heard that this is already, we're kind of like, we're in it. I heard someone say that recently, and I thought, well, that's kind of interesting. Maybe it was like, it was there, but it was just like, it took some of these events to kind of snap it into place. You know, again, that's for the experts to decide that.
Yeah, I mean, I would believe that. I would say that we probably are in a recession.
Right.
I mean, because think about it. I mean, what are people doing in a recession?
Yeah.
They're not spending a lot of money.
Right. We can't.
How can you spend money right now?
They closed everything.
Right.
Yeah.
So how can you spend money right now? I mean, you really can't. So now, there's so many moving pieces, and that's why this is so complicated.
Yeah.
And trust me, I'm not going to get political in this.
Right.
Nobody wants that.
Yeah.
But you know, you got so many moving pieces that I don't care what administration is in. They have to put money back into the bond market.
Yeah.
I mean, they print the money. They have all the cash.
Yeah.
And until, you know, you see calmness come back to the marketplace, which what's traditionally going to calm the markets, government coming in saying, Uncle Sam's got this.
Yeah.
Well, then we might see some things come back.
Okay. Now, in a grand scheme, I'm just curious too, because I've talked to several people in the loan, the business and mortgages. Right. One of the things that I've heard from multiple accounts is that there are a lot of people that are either they're talking about refinances, or they're like, well, heck, if I can get it cheaper, I'm going to go look for another house. So are you seeing that from your end, more leads, or is it more just kind of like, what the heck is going on?
Right. So actually, that's a great point. Gabe, can you pull up another slide there? What's the next one that we got? Okay. So actually, look, this is a pretty good little chart too.
Yeah.
This is since 2012. Okay. And this just kind of further illustrates the point that, you know, rates are still, you know, at all-time historical lows.
Right.
I mean, look, so they move up and down a little bit, but you know, again, if you're getting a rate at 5%, what's more important? That you bought the house, or that you got 3% on your mortgage?
Right.
You know, my advice, if there's any 20-year-olds that are out there, or, you know, 21-year-olds, you know, graduates from college that are thinking about buying a house, do it.
Yeah.
You know, because you're either paying your mortgage or your landlord's.
Yeah.
I mean, I'll just leave that one in there.
Right.
But anyway, it's actually the next slide, mortgage, MBA purchase. So yes, this is, okay, there we go. 4-week moving average. And this is from the Mortgage Bankers Association. But if you look at this, since from January of 2020 here, you see this massive spike
Yeah.
So that's people that are looking to buy a house. They're applying for a mortgage to buy a house.
Okay.
Because again,
these are applications.
That are coming through. These aren't closings. These are people that are actually applying, getting their credit pulled, everything else like that.
Interesting.
But yeah, so you could see in January,
look at that.
04, 05, 06, and then the drop off. So what makes this recession or this looming recession interesting though?
Yeah.
Well, what sparked the housing crisis? What sparked the last recession?
Yeah.
We really, I mean, as an industry, I'm not my company. We didn't do subprime loans, but as an industry, if you could fog a mirror, you can get a house.
Right.
And you had the tulip syndrome with real estate, right?
Mm-hmm.
So gotta buy it, man. I'm going to turn around and flip this. Gotta buy it. People were getting loans they shouldn't have.
Yeah. And
eventually that party crashed.
Yep. That had to bust. That bubble had to bust. Yep.
What's interesting about, prior to COVID-19, mortgage delinquencies are at all-time lows. So with people had jobs, I mean, these are the safest loans we've ever originated in history.
In history.
Yes.
Wow. That's awesome.
So that's what makes this one different is when in a normalized market, people were getting a mortgage and for the most part, they're paying their bills.
Right.
I mean, they can afford it. Mm-hmm. Here you had people that were driving a bus buying an $800,000 house with a stated income loan.
Yeah.
That's not going to work. These loans today work. Okay, but then go to the next slide, which is the refinance index.
Oh, wow.
And so again, you see the same spike here.
Yeah.
And this is what's driving some of the craziness into the market.
Mm-hmm.
So under normal economic conditions, man, these rates, honestly, they should probably be lower than 2.75. Because man, we're coming into a recession. People aren't going to be able to spend money, blah, 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 blah.
Yeah.
Well, but right now, nobody wants to buy it.
Nobody wants to buy the
mortgage. The mortgage.
Got it.
So, I mean, people can still get loans.
Yeah.
And rates are still low.
Yeah.
But right now, their closing cost might be able to be a little bit higher than normal.
Okay.
Because there's no yield, because there's no investors that really want to come in and buy.
Right.
So it sounds complicated, and it is. It's not sexy, but it's just a reality that
it's just where we're at.
It's where we're at.
Right.
But the bottom line is, for those that can buy or have the means to, I mean, they're still moving forward.
Yeah.
So how is this going to play out? And this is what I'm telling all of my originators to be, and honestly, just anybody that'll listen. What's the message that they should be putting out there to the real estate community? Mm-hmm. Patience. Yeah. I mean, and honestly, I mean that more than ever. I mean, a month ago, man, bring that contract in, and we could do a 21-day close. Mm-hmm. Get it over here. We'll knock it out. We'll get it done. Yeah. Not physically possible right now. Yeah. And part of that, I mean, right now we're, because we've been asking our the appraisal community out there, what's going on, and 3-week delays. Spoke to a well-known appraiser here in San Antonio that owns his own appraisal management firm. He's not taking any new orders right now until April 30th. And that was honestly before everything started shutting down.
Was that because of too much work?
Too much work.
Too much work.
Too much work.
From a refinance and?
Yes, and a purchase market.
Okay.
Because everyone started to apply for refinances.
Got it.
So so we have this pile of business that the mortgage industry is still funneling through.
So there's a bottleneck that's been created because of the perfect storm with the rate being where it is, but it's good for buyers and refinancers. Yes. And so now you're starting to get this bottleneck effect. Right. Interesting.
So you have the bottleneck, and then it gets tighter because, well, COVID-19, guess what? Yeah. Everybody, all of our employees are working from home right now. Which they're set up to do. So, I mean, it's almost, for the most part, business is normal. But, well, people that were working from home before also didn't have their kids at home. Right. So, you bring that into the mix. So, we're going to see productivity come down a little bit. I'm just being honest. I mean, and it's not my firm. It's the industry. So let's get that clear. Right. But now also, one of the other players that we have to worry about, obviously, you have appraisals. Surveyors, inspectors, I mean, are inspectors going to want to, do I want to walk in that house? I don't know who's been in that house.
Yeah.
So you have some of that fear attitude.
Yeah.
And then city closures, county clerk records offices. How do we get a deed recorded if they're closed? If you get it, if the deed's not recorded, then the transaction never really existed, did it?
Right.
So there's
a lot of dominoes in play.
I tell you what, when we come out of this, which we will.
Yep.
When we come out of this, this will change the way that the real estate industry works, period.
Yeah.
And I think, we will see, everybody's been moving towards a fully digital, mortgage. I mean, for the most part, everybody has a digital mortgage. You apply on my mobile app or my website from your iPhone.
Yeah.
You're doing a digital mortgage. But I'm talking about like recording of notes, fully digital, and then notes being transferred into the secondary market to show who actually owns that note, and then being transferred into the pool of 10,000 loans at 4% that's owned now by the federal government, or the insurance fund.
Right.
So it's changing the way we do business. I'll bet we also even see companies go, you know what? Why do we have to pay for all this commercial real estate when all of our people can work from home? Right.
Almost have that virtual office.
Well, I think we'll see.
Yeah.
I believe that in my fishbowl, I believe that we'll see that take place. So it's changing the way that we do business. But anyway, coming back to the bottleneck. Yeah. Let's bring it back all the way even to the beginning. Okay, so I've got these contracts that are moving forward over here on the mortgage side, but what's going to come in behind this bottleneck once it pushes itself through? Yeah. Well, some people that are locked in on that 2.75, they locked in at the right time. Yeah. They'll close. But then what's coming behind that? I have a friend of mine that's getting their mortgage through us right now, and he's buying a house on contingency on the sale of his house. Oh. And so I asked him, and he's in a position, they're fortunate, live below their means, so that they can actually manage both payments. But I asked him, I said, well, how's the sale of your house coming along? And he goes, man, well, we had a bunch of showings, but they're not coming anymore. Yeah, no offers. So we're starting to see the showings slow down. Mm-hmm. And same thing with open houses. I spoke with a realtor this morning, and just chit chatting, and she was telling me, it's like, no, I had an open house last weekend, but I had 6 people, and they were actually all just neighbors wanting to come look at the house. Of course, it's how it always is. So I'm going to talk to that because there'll be some agents that listen to this that are listening, and so I hear patience. Be patient with your process, right? No matter who your loan, representative is, hopefully it's John's team. Me, but the dream team. Whoever it is, yes. But whoever it is, be patient because there is going to be a bottleneck, right? And then from a consumer side, so let's talk about the consumer that's going to hear this, right? Right. Because one of the things, a full disclosure, you helped my sister, Keisha. Yeah. And so one of the things that I think is really important is from a consulting standpoint, right? When you really get down to helping people, right, there has to be this idea of really knowing their situation. Can you talk to that for consumers that are out there? Because if refinancing may not work for everybody. Yes, that's true. So talk to it from a scenario standpoint, whether, you should go buy that house. If you're looking, you should go buy that house, or you should think about refinancing. Talk to that, please. Well, I think that comes back to every family is different. And, the internet has changed the way that we shop, right? If I'm on Amazon and I don't see the price that I like, I just switch it and go find somewhere else. Well, you're not buying a pair of shoes here. Mm-hmm. Or, you don't just own a pair of shoes that you're trying to finance. You're buying a house. It's an investment. It should be part of your overall life financial goals is to own that house free and clear one day. Right. And so, your sister called me, and she had already had 2, they were low rate offers. To be honest, they were, I would have told her just to take them if that was what was really her goal. Mm-hmm. But then I started talking to her, And mind you, one of the offers was just from our servicer, which which is great. I mean, there's nothing wrong with it, but their servicer is literally somebody that's in a cubicle somewhere that's just flying through loans.
Yep.
And then the other one was from I won't say their name, but a big name brand. And so, again, similar type of deal. It was somebody that's in a cubicle call center that's just running through loans. And I started talking to her, and we looked at her credit report and what her liabilities were. And I said, well, hey, what if we can get you this rate, which is 0.25% higher than what this offer was over here? But look, we can pay off all of your student loans and your car. Mm-hmm. And now you're on a 15-year loan, and your household savings is $700 a month.
Yeah.
So her mortgage payment in that case, actually went up by $100.
Yeah.
But her household savings were $700 a month.
Right.
So I think that just illustrates the point. It's beyond just the loan, or just beyond getting the lowest rate.
Yeah.
It's
the scenario.
It's the scenario.
Yep.
You see consumers that come through. There's a program that's out there that's great for veterans that are buying a house. Mm-hmm. And if they have a disability, they get a discount. And man, it's a low rate. But here's the thing. It costs 2 points.
Now explain that, because I want to make sure from a consumer standpoint, right? When they see points on their good faith estimate, right? When they see that,
well, it's not a good faith estimate anymore.
What is it?
It's a loan estimate.
A loan estimate. Thank you. Thank you. So when they get that loan estimate, right? When they get that and they see points, they really need to understand what that means. So explain that.
Right. So every point is 1% of the loan amount. So let's use this example about that special VA program, which is a great program.
Yeah.
So let's say it's a veteran, so it's 100% financing. We're just going to make it simple math.
Yep.
So $200,000 house,
okay.
$200,000 loan. So they can get this special program with the special rate, but it cost them 2 points in closing costs.
Okay.
So that would be what?
$4,000. 2 times 2 is $4,000.
$4,000.
Yep.
So if the veteran, for some chance, either, hey, they could pay the 2 points over here. They have plenty of reserves, not a big deal to them. Great, I'll pay the $4,000. I want that low rate. Yeah. Awesome.
Okay.
But we see families that don't have a whole lot of money in savings or cash, or $4,000. Woo, man, I could afford this payment, and I could afford this house. But man, I really don't want to be out all the money over here.
Yeah.
Well, so why not get an interest rate that might be 0.25 point higher and keep the $4,000?
Right.
So I think that goes back to your point, though. It's like, that's why it's important to talk to, and I'll stress this. I mean, hopefully you use my company, but any company you use, I hope it's a local mortgage professional. Yeah. Somebody that's within your community. But then also somebody that's going to actually sit down with you and go through your financial situation.
Yep. Get
the whole picture.
Which is huge.
It's so important. Huge. I mean, trust me, it's so easy to get caught and wrapped up with, push a button and get a loan. Well, a couple things. Every mortgage company has the same technology now.
Yeah.
I mean, we have a mobile app, and you got a digital loan, and you can go to our website and click Let's Get Started, and go through the whole application process. Mm-hmm. But it doesn't stop there. We still have our people either pick up the phone or meet face-to-face prior to COVID-19.
Yeah, right.
We're everybody's opening up Zoom accounts right now.
Right.
FaceTime.
Zoom is blowing up.
FaceTime has become part of our policies and procedures for how we deal with consumers now. But still have that one-on-one consultation and show people the range. Well, I can get you. And again, I'm making numbers up here, but I can get you 3.5% today, but it's going to cost you 1 point in origination. Mm-hmm. I can get you 3.25% if you want to pay 2 points, or I can get you 3.75 and cost you no points.
Right.
But here's the payment spread.
Yeah.
It's $10 a month difference either way.
Yeah.
And then the math that I always tell people too, as consumers, if you're looking to refinance, you might be at a 4.5% rate, but you only owe $70,000 on your mortgage.
Right. Yeah.
Why would you want to go? I mean, it may not be worth it for you to refinance to a 3.75 because you're going to roll closing cost into your loan, and it might wind up, when you look at your savings it might take 5 years for that to pay for itself.
Right.
How do you know you're going to be there in 5 years?
Right.
Why don't you pay $50 extra a month and pay the house off in 8 years? I mean, you have to do math and just be careful what you see on the internet.
Yeah.
So talk to local mortgage people, set an appointment.
That can help you do the math.
That'll
that
illustrate.
Can walk you through that.
Illustrate.
That's huge.
So important. And like talking to your sister, I mean, she asked the question, she goes, man, well, that rate is higher than what's over here. I said, okay. I typed out a nice long email and I said, I'm going to send you something. Call me when you get it. And then I showed her the difference. And in her case, what I explained to her was, well, you can go just do your refi route, right? Yeah. And you're going to save some money on your house payment over here. Yeah. Awesome. But you're still stuck with this over here. Yeah. So what's more beneficial to you? Roll it in, get the cash flow. And of course, we put her on our 15-year mortgage. Yeah. So it's not like she's financing a car over 30 years. Yeah. And what was interesting about her student loan was that the term of her student loan was about 18 years. Yeah. Fully amortized. So, I mean, she's still saving in the long run. She's going to win. That was a win-win.
It's a huge win. She was so pumped, by the way.
Awesome.
And that's the one thing that I think about what we're faced with right now with the real estate community is we need to educate.
Yes.
Right. And so for all the realtors out there is you need to find someone like John that can educate you so that your clients don't make big mistakes right now. It's huge.
Or worse, false expectations.
I'm
not going to shame anybody, but I will say if you're not a mortgage professional, please don't talk about mortgage rates on social media.
I 100% agree.
That's my PSA. Yeah. First, you're supposed to be licensed in order to do that. Yeah. But again, there's so many complexities involved, and we had people literally, that was showing me posts from folks in the industry that were not mortgage people. Fed lowered rates to 0. They're super great right now.
Yeah.
It sets bad expectations. Yeah. And as well as I do. I mean, what's better? Over deliver and under promise, or under promise and over deliver. I mean, it's.
No, I know exactly what you mean. Yeah. If you get caught in this, and I think one of the things right now that I'm thinking out, and the reason why I wanted you to come here is because there is a situation going on right now, right? And there's a lot of fear. Right? There's some fear in it because what we have right now is not just a local shutdown. We have a global shutdown.
Yes.
Right. Which, in my lifetime it's never happened. I mean, in our lifetime has the globe not shut down.
Not a shutdown in the capacity of, I really can't go to my favorite Mexican restaurant right now.
Right.
I have to get curbside service for chilaquiles.
Right.
But you go back to the Great Recession. That was a global recession.
Yes.
I mean, the markets were frozen.
Right. Okay.
So the financial markets have been through this before. Now the velocity in which things are moving.
But from a small business perspective. Have we ever we're kind of uncharted waters, right? It's uncharted.
This is absolutely uncharted.
Yeah.
I've got a really interesting chart. Go to actually the last one. Yes. Okay. So check this out. This is from Open Table.
Okay.
And this is year-on-year change in diners.
Okay.
So this is, people eating out. All right. So you go and look at this. This is by day.
Is this all the way up until literally like March 17th?
March 17th.
Oh my gosh.
So, that's, just the U.S. as a whole is the black line here.
Yeah.
But Seattle, shut down. Boston, shut down. San Francisco, shut down. New York State, because the state is still open. The city shut down.
Yeah.
Shut down. Washington State, shut down. So the local business people are getting hurt right now.
Yes.
And I think that, that's who we need to have a lot of our, I mean, I hate to use the term thoughts and prayers with, but it's true. We need to be supporting our local guys now more than ever.
Yes.
And I think the government is trying to figure out how to step in and do that. But I mean, people are going to get hurt.
But bigger picture too, we can be part of that help by, still getting some food to go.
Yes.
Getting some of that food to go, helping out some of these restaurants. Obviously, we're not going to be able to make, the dent that we could, if we could fill up their restaurants.
Right.
But if we could still support some of these restaurants by getting some stuff to go, that will kind of help a little bit.
Absolutely, that'll help a little bit. So here's what's interesting with this is, I guess the news already came out this morning. They said 0 new cases for the first time in that Wuhan province or whatever. And if that is in fact true, then you're seeing this wave. It's like a tsunami wave that's just, it literally shut down the globe.
Yeah.
But you guys know as well as I do that once we get to that point, we're not there yet, but once we get to that point back here, normalcy will come back.
That's right.
People will go out. We have the shortest attention spans on record.
Yes.
Although this is a blip in the history books and we're living in it right now.
Right.
But, rising tides do raise all ships.
Yeah.
And we will get through this. Look, we got through 9/11.
Yeah.
Didn't know what was going to happen there. We got through the Great Recession of 2010.
Yeah.
Didn't know what was going to happen there, but we got through it. We will get through this.
Yeah. So getting on the other side of this, no, that's okay. I one of the things that I did a class yesterday. It's probably gonna be the last class I do for a while. Everything's gonna be virtual.
Yeah,
this was a live class. Had about 10 agents there. One walked in, we had to kick him out. Like, hey, we got 10. You got to leave. No, I'm just kidding. But but we did it. We did this class on listing presentation, and which you've seen that class, right?
Oh yeah, it's great class.
And I added a little iBuyer to it, right? And so, which is, perfect. The iBuyer is a big deal. So, but as I was teaching that class, one of the things that I was thinking about is like, there's going to be kind of like this wave effect afterwards. Like when we get on the other side of this,
it's going to be crazy.
It's going to be nuts.
Yes.
Right. And obviously because this is a virus and there are, you have these, cyclical cycles with this, right? So it's up and it's down. And so when we get on the other side of this, talk to that for a minute from a real estate perspective, from a lender perspective, like, you got to be preparing now because it's coming and you've got to get ready.
So just think about this. Would you want to live in an apartment after all this mess is done?
That's a good point.
I'm just, I try not to joke, but I think that's a reality. I think people's psyche is now going to be, man, I sure do wish I had my own place. I don't know what my neighbors got over there. So yes, it is going to be nuts. Yeah. And again, that goes to what am I telling loan officers and realtors to do? Talk to your database, talk to your people, be informing them, be proactive. And people are still shopping for houses. They're not, they may not be putting an offer in today, but they're still looking at houses.
People are looking.
They're looking every day. They're just, no one's going to, say, oh gosh, well, I'm just going to keep living in my apartment now because of COVID-19.
Yeah.
So it is going to be nuts. And when we do have to be ready for that. So from a mortgage side, we're telling people, even people that are, look, right now, it's not worth it. I can't get you a rate that you need to be at for this to make financial sense for you to refinance your house. But let's go ahead and apply. And we're just going to monitor it. And when it strikes, I'm going to call you. I'm going to say,
lock it in,
and let's move forward.
That's great. A great
so
point.
We're getting people to do that. Same thing on the purchase side. I gave an interview this morning to Univision, and my message there was, look, you can still talk to a mortgage professional that's local and have the ball rolling. If you were looking to buy a house, 30 days ago. Mm-hmm. And okay, maybe we're taking a little temporary freeze and putting that offer in, but once this is through, which it will be through, man, I'm going to be ready to buy again. But I don't know if you've got credit things you need to work out. Let me, run some numbers and analyze and say, okay, you're going to need X amount for closing. You need to save this much money. You might need to get a gift from mom and dad for this much money. I mean, there's because again, everybody's financial situation is different.
Right.
So talk to a mortgage consultant and plan, strategize.
And I love that word because I think that word is really important. A consultant.
Consultant, yeah.
Because every scenario is different. It's not a cookie cutter mortgage process. Right. You need to know what they're going through and what their situation is, both with credit and they're obviously debt to income and everything else. And so if you know the whole picture, you can really help them. Right. Cookie cutter process, you can't do that.
So it's kind of interesting. So that brings up another point. So right now there's a lot of talk about is the government going to say I don't need to make my car payment this month, or I don't need to make my credit card payment this month? Well, that could be problematic.
Yes.
Because unless you have it on the dotted line, or I mean, if you just can't make that payment this month, it could have an impact on your credit report. And if it has an impact on your credit report, well, guess what? Then in 90, 120, 180 days, you might not be eligible for the lowest interest rate again.
When we get on the other side of this.
Right. And so then you get through this whole, process. So yeah, talk to a mortgage consultant and plan.
I love that. Well, John, listen, I really enjoyed this. I think that, was there another slide? Is there anything else on here that you want to touch on?
Yeah, actually the existing home sales.
Yes, please.
And this chart, again, this is from seasonally adjusted annualized rate of monthly sales.
Okay.
So I think this is just important. So obviously this is right up prior to COVID-19.
Okay.
We were in a hot market.
Yeah.
I mean, this was the global recession, 2010.
Yep.
That was the bottom of the barrel, right? Man, look how good we are. The demand is out there. So stay focused, stay positive. I'm not saying don't be ignorant, but stay positive.
Stay positive.
You had a great post when you showed people panicking at HEB.
Yeah.
Don't go that route. Love your neighbor.
Yeah.
Be kind. We will get through this on the other side.
Yeah, I think, that whole idea of fear, right? That false evidence appearing real, just falling into this fear and panic can really be detrimental.
Yes.
Especially with the crazy hoarding, right, that we've seen. But on the other hand, right, there's prepared and then there's hoarding.
Right.
Those two are very different. So for everybody out there, know the difference.
The guy that has 3 boxes of hand sanitizer versus 17,000 boxes of hand sanitizer, there's a big difference there.
Big difference. Yeah.
But yeah, it's, and I guess one last word to mortgage people out there, to real estate people, to title people, our industry partners. Don't just stop working.
Yeah.
The way you work may be looking a little bit different. And I tell you what, I mean, if I were a listing agent, and I know we're starting to run long here.
No, you're good. Say it. This is going to be good advice.
This should be good. Redfin announced today they're halting their iBuying program.
I did not hear that.
Yes. So who's going to be next?
Well, if they're one, there are going to be others.
There's going to be others. And think about this. Why are they halting their iBuying program? Because maybe they see that there's going to be a little blip on the radar screen. Maybe they're saying that, oh man, we got to preserve all of our capital over here, so they don't want to go out and spend the money. So I think that there's a good play if I'm a local real estate professional to make the pitch about staying local. Because, hey, guess what? That New York money, hedge fund money, they really don't care about you.
Yeah.
They just want a deal.
Yeah.
But I'm your neighbor. I care about you. And by the way, if you list your house with me, you're going to make more money than you would going through that 100% that stuff.
Yeah.
So I think there's a great opportunity there. So if I'm a listing agent, right, and and I'm not, but I mean, I would be thinking, man, how do I get the word out to all the people that will potentially be looking to sell their house
as we get to the other
6
side
months from now, once we get to the other side.
Yep. Or even now, because there are houses being looked at.
Yes. There are.
And offers being made.
Buying a house in 30 days. Yes.
I mean, there's a lot of stuff being looked at. My house next door to me just went on the market. Okay. It's been vacant for 3 years, John. It's been vacant. I've seen 5 people go through that house. Okay, it's or and I'm sitting there looking. I'm like, we're at home. This was Monday, kind of like in quarantine, and I'll just go outside and I'm looking. I'm like, there they are, and I'm waving at them. You know what I mean? It was a weird experience. You just kind of sitting there thinking, well, that people are still looking, right?
Right.
But you were onto something. So I think number one, getting prepared and talking to your sphere. I love that. Yeah. The other advice that I think, and I thought you were going to go there, but I'm going to mention this, is learn new technology for virtual meetings. And you mentioned this earlier.
Yeah, Zoom. I mean, we use Zoom at our office, and it's amazing.
Yes. Learn Zoom.
Yes.
And use, whether it be Zoom, whether it be FaceTime.
Or any of them. Yeah.
Right?
But
learn technology that's going to connect you, but maybe you don't have to necessarily be in the same room. I think that's going to be a big deal because look, let's be honest. Are people going to list their home between now and April? Are there going to be some people that they need to list their home?
Right.
100%.
Right.
And so if you can be on the cutting edge, you can be doing these listing appointments virtually.
Absolutely.
You could be having them walk you through the house. You could be looking at it virtually, creating the same presentation and being ready to go, which I think is really, really important.
No, there's no question that you can do that. And I think, just going forward, the way that people shop is going to be different from now on too. Because, and one thing I thought about this, so okay, and not to get too far off topic, but I was thinking about this. I was like, man, how's Amazon working out for you right now if you needed groceries or anything else like that? I mean, yeah, sure, that's great and convenient, but in a crunch, sure, it's nice to know that there's
everybody's using it
right down the street.
Yeah. When everybody's using it, it changes.
But yeah, so with that listing deal. So you got technology, you got Zoom. People aren't gonna. People still want to sell their houses.
Yeah.
So don't be afraid.
Don't be. Yeah. I 100%. You need to be prepared.
Yes.
Get ready, because on the other side of this, you're gonna want to get listings, and during this, you're gonna want to get listings.
Yes. I mean, you. Yeah. It's like you're building a pipeline.
You build the pipipeline. What? Yes.
And I know where I was going. So I get sidetracked with the HEB Amazon thing. So because we study this, I'm kind of a geek. I study this, but when I'm looking at, how do millennials shop?
Yeah.
When it comes to getting a mortgage, and there's enough data out there now that shows that, everybody is beginning their process online. Mm-hmm. It's nature of the beast, right? Man, I can just look at my house on my phone and shop, mortgage rates and see what's up. Yeah. But what's interesting is surveyed millennials have actually, even though they begin their experience over here online, digitally, they still prefer to talk to a live person.
Yep. I could totally see that.
Because, I educated myself. I think I'm a mortgage expert now. Now I want to buy. So, but man, I don't want to do it I'm not going to do it with Bob in a cubicle 2,000 miles away. I still want to work with my local person.
Yep.
So even though that consumer that you think, oh, well, maybe they'll just keep shopping. Well, guess what? When they're ready to pick up that phone and talk to somebody, you want it to be you.
Yes.
So how do you do it? Call people, text them, send stuff in the mail. The mail still works. Yeah,
stay in touch. It's critical. Right. So to wrap this up, I always like to ask a question. This is from the Tribe of Mentors by Tim Ferriss. These are questions that I always like to ask. And I'm wondering, in the last 5 years, what new belief, behavior, or habit has most improved your life?
Does a saying count?
Sure. What's most improved your life?
It's easy to do. It's easy not to do.
You got to explain. I love that.
So that is a great line from the book The Slight Edge, and it's going the extra mile, or it's the difference between not going the extra mile. So if you extrapolate that, well, man, it was easy to do. It was easy to make that one more phone call, that one more email. Well, okay, if I make one more phone call every single work day, to prospects, we'll just say that from a sales side. Well, then that's 20 more prospects that I touched. So in that month, over the course of the year, that's 240 prospects. That's my closing ratio. It's got to be, let's just say I've got a low one. That's a 10% closing ratio. Well, that's 2.5 deals that I got. times whatever amount I make per deal.
Yeah.
Well, or I'm not going to make that phone call. Well, number one, then that prospect wound up going to the person that was making those calls, and you didn't get it.
Yeah.
But it's so funny. But I find myself even in my household, because we got dogs, right? And so it's like, oh great, the dog tracked mud in again. Well, I don't want to pick it up, or I don't want to wipe it down. But it's easy to do. It's easy not to pick up the mud that's on the floor that the dog brought in. But it takes 2 seconds to just grab a paper towel and wipe it up and do it. And by doing that, I swear my wife appreciates me a little bit, helping out 100. A little bit more.
Yes.
So easy to do, easy not to do.
Yeah. That book, that was pretty, wasn't that awesome?
It was amazing.
So we did a mastermind on that book that was last year, wasn't it? It was last year.
That was the second to last one we did. So so that was last year. So it was
in September, somewhere around there, I think.
Late summer, early fall.
Yeah.
Maybe.
Yeah, what a good book. For those of you who don't know that book, it's Jeff Olson. We'll put a little link. We'll put a little link for you if you don't know that book. Gabe will add that on our YouTube channel, because that's a book that I definitely think anybody if you're doing anything, you need to read that book.
Can I make a great example?
Sure.
So you handed out material. It was the tracker, right?
Oh yes.
And just to see, it's easy to do, easy not to do. And so I kind of challenged myself to reach out to one old friend for a month.
Okay.
Every day.
Yeah.
And it was, these are people that I haven't talked to since college in some cases.
Yeah.
At the very least years. And so it took 15 minutes out of my day, but from a business standpoint, I actually got a deal out of it, which was interesting enough. So, we had a loan come into the office because of it. But also, I just felt good about reconnecting with some folks that were my, best buddies 20 years ago. Mm-hmm. It was easy to do, easy not to do. And it's one of those things where, we are getting older.
Yeah.
We're not all spring chickens. And, we've all known people that have passed already. So I think it's important just to, that, but that book made me challenge myself to get out there and just randomly reach out to folks.
I love it. John, thank you for being on TM3 Impact.
Virtual fist bump.
Bam. We got to bump our elbows.
Yes.
And I really appreciate it. How can people get a hold of you and your company to learn more about being consulted on a mortgage?
Yes, absolutely. So a couple of ways. I know this sounds funny, but an easy place to start is www.mortgagefinancialsa.com.
Okay.
That's just our website, and that's just an easy way to go there. But my email address is jhudson@mfsus.com.
Okay. I'm
at Twitter @jhphudson. I've been inspired, so I do my own self healing and self help, and find a motivational quote for the day to put out there every single morning.
You do every day. Love it.
I'm on. You can find me on LinkedIn. Or our office is right there at I-10 in Camp Bullis.
And what's the office number they can reach you at?
Office phone. Well, best way to reach me, honestly. Yeah. And trust me, I give my mobile number out to everybody.
Cool.
Is area code 817. Don't be thrown off by that, San Antonio. Yeah. I really am. I'm a San Antonian.
You are.
But I've had the same number for 22 years. 817-247-4766.
Awesome. John, thanks again. Really appreciate your wisdom and sharing it with us on TM3 Impact, man. We'll see you soon.
Hey, well, if people do, just trust me, I'm kind of, like I said, I'm a mortgage geek. If people just want to email me any questions or email you any questions, I'll be more than happy to just fire back, send out some cool charts and show you, because I think it is, the more you know.
The more you know. That's what it's all about. Thanks, John. Appreciate it, buddy.
All right, brother.
Thank you.